Welcome back to Closing Bell on a Monday on the 12th of October 2020. And today I would like to bring 4 stocks in focus, 2 US ones and 2 international ones, just stir things up a bit more different. So the first one I'd like to speak about is Disney. So Disney recently sacked 26 to 28,000 people, mainly the guys working in the park. And also, all the movies are not going into the movies now. They are pulling out, going to online streaming, so to the Disney Plus. So there's a bit of a infrastructure change. They are trying to focus to go online. They're trying to go digital. With all the patents they have, the likes of Fox, like Star Wars, they're trying to compete with the likes of Netflix. They're a bit opposite to Netflix. Netflix started off borrowing content from other people. When they got money, they created their own content and became their own brand. Disney, on the other hand, they have loads of patents, and if you go to their platform, there's so limited stuff to watch because there's still thousands of movies, but the fact that most of them have watched before, but there's no new content or content from other areas. So it's something to watch. But the thing is, Disney it's up 5%. People are jumping and say they're going to change. For me personally, Disney is no longer a growth stock. Disney is a dividend stock. I invested in Disney in 2015. It was $120. Today, Disney is $125. It hasn't grown really much. So Disney is a great company, great patent. I like Disney. I'm a huge fan. Even though at age of 40, huge fan still. But I think Disney is still only a dividend stock. So as time will tell. Other areas will be better for your money. But if you want to keep for 20, 30 years, you want to invest in your kids, fine. Disney is still a great company. I think there's still room for growth. But as it stands, they need time to change. They need time to absorb. The likes of Apple is also going down that business, so there's still competition. And up against the likes of Facebook, and up against like Netflix, you got Roku, huge competition out there. So this is my thoughts on Disney. Second one I would like to speak about is Twilio. Twilio bought a company called Segment, a customer data infrastructure company, for $3.2 billion. Twilio is a great company, I must say. Great company. It's way above its valuation for me now, $312, $320 per share. I am looking forward to the earnings that's coming up to see how well they're doing, because end of the day, like I mentioned before, Twilio is a benchmark indicator for all the stay-at-home stocks. Stay-at-home stocks like the e-commerce stock, the cashless transaction stock, things that change our lives after COVID. We're locked indoors, we're not going out too much, we're doing everything online, and Twilio is a benchmark. If the customer growth base grow, all the other companies like Zoom, all the other companies that support e-commerce, cashless transaction, all those companies will grow as well. Because the first thing, that if you want to set up a business, you go to Twilio to get all the components together. So Twilio, great. If you own them, hold them. If you want to buy them, wait. Let's try to calculate their actual value, because data we have now is insufficient. And if you want to take a punt, it's a risk that you take. I prefer to understand the risk before I go in. But again, a great company. If you hold it, if you own it, just hold it. The next one, something a bit different. This company is not IPO yet, but it's against a huge company called Square. The company I would like to speak about is Revolut. Revolut is a digital bank. Digital bank that hosts 13 million users in Europe alone, the biggest in Europe. And they've applied for bank charter in California, and it's approved. They're going up against who? Who else? Square. Square is huge for the Cash App. So much potential. They're trying to go digital banking. That's the reason why Square is just exploded from $50, not far away from Christmas, and now they're worth about 180, going to 200, almost 4 times for Square. Super overvalued because of Cash App. But think about it. Digital banking, digital finance, all these electronic payments are far superior in Europe already, in the likes of Holland, in the likes of UK, in the likes of Berlin, Germany. Those guys have done it a long time ago. So now it's going to America, it's going to give Square a good competition. For me personally, I prefer the underdogs. I prefer to value the guys who are starting up. So going down, I'm watching Revolut really, really closely. I still think Square is overvalued, but don't mind me. Square is a great company, great vision. But I just disagree with what all the other YouTubers are saying about the Cash App, because I have used similar Cash App like the Revolut, the Monzo in Europe. So it's not something revolutionary because others have done it. Square is not the first one, but Square has got other e-payment system which they lack. So let's watch and see and how this digital banking wars will be coming out. But I know the losers will be in this. The losers will be the actual banks themselves, because the likes of HSBC, Standard Chartered, they're still not doing anything. That's my thoughts. Okay, finally, a Chinese company. Everybody's been asking me for a Chinese stock. So let me bring you one that's different. It's not Alibaba, it's not Tencent, it's not JD.com. It is Meituan Dianping. It sounds like an antique company to me, but no. Meituan Dianping is a service company. It's an online service company. It's like TripAdvisors. You want to book restaurants, you want to book Uber Eats delivery, you want to go book for hotels like Yelp, you want to go Groupons. They've got all. They're a service company. You want to buy tickets like Ticketmaster. Meituan Dianping is the one. They are the biggest host in China. They're serving billions of people with Uber Eats equivalent, with Groupon, with entertainment, with hotel bookings. They are the king in China. They're looking to expand, but they're still trying to serve everybody in China. They might be expanding down south to Southeast Asia, to like Singapore, Australia, and everywhere. So great company. I've invested Meituan Dianping a little in my eToro account. I'm hoping to go big. I think it's a Chinese company. I want to go big because I still see a great potential in them. They're not the Alibaba giants yet, but they are going to that direction if they succeed. They built a reputation, they built the infrastructure, they are going big. So Meituan Dianping is one of my bullish ones in my radar. I'm already in it. So this is me for Closing Bell on the 12th of October 2020. So please like and subscribe, and I hope to see you soon. Thank you. Bye.